Good afternoon, everyone. This is Winfred Burns II, your money mentor, and I am here to talk to you about the things you should do, the things that I talk to my customers, my clients about a lot during this time of the year, and that is what to do with a tax refund. So let me say there are a lot of schools of thoughts concerning if a person should get a tax return, if they shouldn't, but that is for another video. But in short, I will say that a tax return is simply an overpayment of your wages or your income that you have, that the federal government has taken. Given the new tax systems, the new changes that are made to the IRS code, I'm always one that says that it's better to be safe than sorry, in the sense that it's better to overpay than at the end of the year come and have to owe. However, there are some who are going to disagree with that, and there really is no, in my opinion, right or wrong way to do that. That depends on you, that depends on your scenario, that depends on your spending. So today what I want to talk about again is I want to talk about what you should do with your tax returns. For those who don't know, my name is Winfred Burns II. I am the Money Mentor. I advise, I coach, I train individuals and businesses how to eliminate debt and how to accumulate wealth. And so that is what I do for other people, and I want to do that for you today on this Financial Friday. I hope you enjoy. So let me also start by saying that in order for you to get a detailed or specific plan that fits you best, I do encourage you to either sit down with myself or your financial advisor, because then we can talk more about your long-term goals. So what I'm telling you today is the general rule of what I talk to with my clients and when I coach individuals, because ultimately, again, something's going to be different. You might have a different goal, and so that might require you to do something different in this specific scenario. So again, this is what you should do if you get a tax refund. So let's jump right into it. So the first thing that I tell my clients to do if they get a tax refund is to pay down, pay off debt. Now, whether you pay down or pay off is determined by the type of debt and the amount of debt it is. And I say that because for some individuals, certain tax write-offs apply to certain debt, and depending on the amount of refund you get, it might be better to pay down versus pay off, or pay off versus pay down. So again, the specifics of that are something that we have to talk about in a session. However, the first thing we're going to look at is how we can pay down or pay off any type of debt. I have a little asterisk. If you see this little asterisk up here, and what that says is you also can pay debt or your monthly bills a month ahead. That's a strategy that many of us believe, because you never know during the course of the year what could happen. Somebody could get laid off. You could have an expense that you weren't expecting, and simply having your bills paid up a month ahead will help eliminate, or could help be that cushion that you need to make it through that rough period, similar to like we just had with those who were government employees. So that's definitely something that I recommend: paying down, pay off, or pay up your current monthly debt. The number two thing we look at is we talk about establishing or building up your savings account. And this is an important one, because studies have shown that there are a large portion, close to 50% of Americans do not have enough money in their savings account to cover a $1,000 expense. And so this could be an opportunity for you to get yourself to the place where you have the type of emergency savings or savings in place that if something were to happen, that you would be covered. But as you can also see, there are also other types of savings accounts that I'm recommending taking a look at. For one, you've got your Christmas savings account. Well, typically what happens during the holiday season is people put money onto their credit cards, or spend money that is assigned to bills in order to buy gifts and things like that. And so this is an opportunity for you to establish an account that is specifically for Christmas, so that way you don't have to continue in that cycle of run up credit cards during the holiday, pay them off when I get my tax return. And you can then use tax return money or other money to build wealth instead of just trying to pay back money that is already was spent during the holiday season. But there are other types of savings accounts besides an emergency fund, and a Christmas fund. You also have what's called an HSA, an health savings account. A health savings account is a tax deferred savings account that gives you the freedom to save for out of pocket expenses that you might incur during the year. So if you have a plan, like a high deductible plan at your work, with your employer, and as a part of this high deductible plan, you have to pay co-pays or a certain amount before the full insurance kicks in. Sometimes we don't have those money waiting around. So this is an opportunity to put that money aside, so you are then able to have the deductible money when and if it comes through. And it's not like a flexible spending account where you have to use the money that year. With the health savings account, you don't have to do that. It can roll over year to year, and again, it is tax deductible. Another type of savings account is the college savings account. So we have college 529 plans, but there are some financial institutions that have college savings accounts. So that money, again, is different from the college savings account, or the 529 plan, excuse me, but it does give you, again, the opportunity to begin building, because college every year is getting more and more expensive, and so we want to be prepared when we have college kids who want to go to college. So the second thing, again, establish a savings account. What I didn't fail to mention is in all of these, you can establish the account and then contribute to it monthly. So with any of these accounts, you can say my goal, for example, is to save $1,000 a year for this year in my Christmas account. So you might start this account with $500, and then every pay period automatically transfer a set amount into this account. So by the time November gets here, you have that $1,000, and you know now you have a budget set aside just for Christmas, or you have that $1,000 saved for your health savings account. You have that $1,000 saved for this year's college, for college tuition. So that's another option again for the savings account. Then number 3 is to invest. So once you have your savings accounts taken care of, once your bills are either eliminated or under control, you then can move to the investment stage. The investment stage, again, is where we want to be, because now that means that, like I said, number 1 and 2 are taken care of, and we can put more money to investment. This is how we build wealth, by investing. So what should we invest in? First and foremost is, do you have life insurance? Do you have life insurance? Do you have something in place so if something were to happen to you, your family would be taken care of? Life insurance is important. Number 2, you can invest in equities, so stocks, bonds, mutual funds, things like that. You can invest, take some money and start investing into those. Number 3, we've got businesses. Business is an investment. So you have a business and you need something, you need additional equipment, additional training, something that will help take your business to the next level. Then now is the time that you want to do that. And then last but definitely not least, education. Education is an investment. So is there a class that you know that you need to take? You can use this as an opportunity to do that. But what you want to do, again, is you want to start with paying off debt. Number 2, establishing or building up a savings account. Then number 3, invest. So again, This is what you want to do if you get a tax refund. I hope this was helpful to you. If you haven't signed up for the Money Mentor email list, please do so. The link is in this video, is in the bio of this video. Also, again, make sure you see a financial advisor that will be able to give you specific details about how much you should do each of these for. And if you have any questions, you can always email me at themoneymentor1@gmail.com. I'm always here to help and to answer any questions that you may have. Hope you have a good day. And again, let's be wise. Let's build wealth. Let's eliminate debt so we can truly experience the life that we want to live. I'll talk to you later.